Welcome back. Owen's here to give us a business update. Hello again, Owen.
Claire.
And it's the start of the trading day here in Europe.
Yeah, European markets a little bit flat. We saw some good gains yesterday. In fact, the best day of the month so far for most European markets, taking the wind out of their sails, though, a little bit this morning. Those gains didn't really last in Madrid. We had a bond sale there, remember, huge test of investor confidence that went reasonably well, but you can see there at the bottom of the board, the IBEX down by around 0.5%. A good day's gains, though, on the Asian markets, the Nikkei finishing over 2% up, and the Shanghai Composite and Hong Kong not too far behind it. Those are the numbers there for you on the Asian markets.
Now, the earnings season is so far confirming expectations. No great gains.
Not really, no, absolutely plain sight. We thought it would be a pretty flat earnings season, and so it's proved so far. Just a few of the companies that have reported results in the last 24 hours or so. I've picked out a few there. As you say, Claire, not really spectacular. Coca-Cola perhaps has had the best of the day's gains in the last 24 hours. Its first quarter earnings up by 6% to just over $11 billion. But then the story starts to peter out a little bit. Tesco has reported full year results. Yes, they beat analyst expectations, but we're only talking about profits only up around 1% or so. And Yahoo as well, its first quarter earnings up just over $1 billion. Again, only 1%, but perhaps more symbolic of a company that is managing to at least find a few gains after a fairly torrid 12 months.
Next, Argentina's isolation. Spain's leaders have reacted with fury after Argentina nationalised oil company YPF, shattering its partnership with Spain's Repsol. The losses for Repsol have already been huge, but Argentina equally stands to suffer just at the moment when it seemed to be getting back on its feet after the economic crash 10 years ago.
A diplomatic and financial storm over Argentina's oil fields. The Argentine government claims Repsol, YPF's Spanish owner, hasn't invested enough in its oil sector, while Repsol says Argentina has pushed its share price down to facilitate a takeover of YPF. According to them, the move is illegitimate and unjustifiable.
This
action was preceded by a harassment and coercion campaign and carefully planned leaks intended to lead to the collapse of YPF's share price and thus facilitate the expropriation at a bargain price.
La expropiación a un precio de saldo.
For now, Repsol owns 57.4% of YPF, with 25.5% belonging to Argentina's Peterson Group, 0.02% to the Argentine government, and 17% traded on stock exchanges. Argentina's president wants to seize 51% of the shares, all of which will be taken from Repsol's stake. For some, a justified move.
There's not been a level of investment that corresponds to the utilities the company has. Argentines are living out the consequences of importing combustibles, gas, oil, refined petrol. We need to recover that, because if not, it is going to get worse and worse.
If this goes ahead, Repsol will lose out on the lucrative Vaca Muerta oil field recently discovered by YPF. Spain has warned it will defend its interests, and foreign companies may now reconsider investing in Argentina.
Okay, we're going to pick up on one or two more of the day's business headlines for you now. The two Larrys, that's Allison and Page, have been battling it out in a California court as the respective heads of Oracle and Google testified in their copyright trial. Google is accused of stealing Oracle's Java software patents to develop the Android operating system it uses to run smartphones. Google CEO Larry Page said his firm has done nothing wrong, but Ellison, who's seeking around $1 billion in damages, insists that his rival has been abusing open source software.
And Warren Buffett has been diagnosed with prostate cancer. The US investor, who's become one of the most successful in the world, told clients of his Berkshire Hathaway investment company that the disease is not life-threatening. He's expected to begin a 2-month radiation treatment program in July.
Okay, where are we going to go next? Just to pick up on what we were saying a little earlier on with Spain's debt problems, it did manage to successfully sell off around 4 billion euros in government debt yesterday, but conditions remain particularly difficult, not just for Spain, but across the Eurozone. We're joined on the line now by Sonny Kapoor. He's the Managing Director of the economic think tank Redefine. He joins us on the line from Brussels. Sonny, good morning to you, and many thanks for joining us on the Business Show. I did mention Spain in my introduction there, but we really should talk about France as well. We've seen the two presidential candidates there, Nicolas Sarkozy, the incumbent, and François Hollande, trading lots of blows over the economy. One of the things I was particularly interested in was the difference between these two men when it comes to the approach over the AAA rating with France. We've got Sarkozy saying, look, we cannot spend any more. We have to rein in those deficits to protect our credit rating. François Hollande, the socialist opponent, says we can afford to take on another 60,000 civil servants. And his message has been, don't worry about the markets. It's all a bit confusing. Who's right, do you think?
Well, I think that in the short term, both of the candidates are right in terms of their approach that the ECB needs to do more. That has always the right way to go forward. And I think that there is not too much difference between what Hollande is saying and what Sarkozy has been saying. In terms of France's own domestic position, that's for the European level. In terms of France's own domestic position, you do have a rather high public spending to GDP ratio, which is unsustainable in the medium to long term. In the short term, I think a slower pace of adjustment is called for. And personally, I think the credit rating does not matter too much. France, if we go back to what happened earlier this year, has already lost its AAA with Standard & Poor's. And when you have a situation where most countries around have lost their AAA, investors have to put their money somewhere. And if you go back to what happened with the United States, which is the largest market in the world, when it lost its AAA rating, its borrowing costs actually fell. So I think an excessive focus on AAA is unwarranted, but I'm also not sure that France can afford 60,000 more civil servants.
Sonny, Claire Pride here in the studio with Owen. Now, you said months ago that this Euro crisis was far from over, and you think Eurozone leaders should have been doing more while things looked more optimistic in the first few months of this year.
Absolutely. The complacence has been completely shocking, and the ECB LTRO, the support the ECB has been providing to banks, the temporary relief that brought about led to EU leaders believing that this was somehow confirmation that their strategy was right, which was completely the wrong message to take from what has been going on. We desperately need growth. We've been insisting on a growth strategy. Peter Bofinger, who's one of Merkel's Council of Economic Advisors, and I published a growth compact that we have been going around talking to governments about. And one of the key proposals there is for the European Investment Bank to be given the callable capital of the EFSF to almost double its lending capacity. We know where we need to go. We know where we are now. And the only way to get to where we want to go, which is a Europe that is stronger, is through much slower pace of austerity with more public investment and infrastructure financed by a European Investment Bank, and with the European Central Bank providing the floor and saying that we are not going to let the borrowing costs for Italy and Spain, for example, rise beyond 5%. That is the only sensible way to improve things without having massive accidents on the way and ending up with a Eurozone breakup.
Sonny, just briefly, that's a good plan, but it took us over a year to get even a half-baked solution to this Eurozone crisis. What you're talking about could take much longer to try and implement. Don't we need something that can solve things right now in the immediate term?
There's been no red line that has not been crossed yet. And I think that eventually we will have to see a much stronger direct role for the ECB to support sovereigns and a much stronger role for the European Investment Bank. There does not, to my mind, seem to be any other way possible.
Okay, Sonny, many thanks indeed for talking to us. That was Sonny Kapoor from Redefine in Brussels.
And thank you, Owen, for that business update. Do stay tuned to France 24. All the latest headlines coming up in just a couple of minutes with Stuart Norval.